Good morning, everyone. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Dee. I'm the VIP coach for chameleonaires and also a Series 3 qualified futures trader. I've been trading for about 18 years at this point, mainly specializing in some of the more unusual products like platinum, copper, crude oil, gasoline futures, natural gas as well. But today I'm looking at this gold and trying to figure out what they want to do with it. Yesterday was a really messy day. I was actually looking for a higher high, which we actually got today. So it's a little bit annoying when that happens. It's like, yes, you have a plan, but then overnight doesn't quite do what you're expecting it to do, and then they start chopping and chopping and chopping, but ultimately kind of going down. How does that look on the daily chart? I mean, it looks messy, doesn't it? It looks messy, but here we are yet again at an all-time high. So I'm looking at what the options activity is saying, and it's still saying higher calls. So they're still gunning for that 3K. But, let's just see what they want to do with this right now. They have failed the auction. The initial balance is actually pretty small for gold. It's 58 ticks. VWAP has been left in the dust. It's all the way down at 29.61. So it's a little far away from everything today. We have a lot of GEX levels here as well. So I've pulled out the two nearest ones, but these gamma exposure levels, when they start stacking up really close, I would say that it rarely means a very nice day. On the other side, I am also stalking more shorts in platinum, which is something that I've been doing over the last couple of weeks. So I know that a lot of people trade gold, so I figured I would do a bit of an analysis on gold. We are above value quite a bit. That always introduces a possibility for a mean reversion down. The London value high is sitting at 29.60. London average session range low is sitting at 29.56. If we do manage to rotate all the way down there, I wouldn't be surprised to see some more stalling in and around this 29.54 area and 29.56 area before they do anything else. Why? Because that is an algorithmic projected range for whatever gold has been doing over the last 10 to 14 sessions of the London hours. So, yeah, let's just watch this GEX 8 and GEX 6 area. But just to give you an idea, we actually have GEX 4 and 29.60 as well, so that's some confluence with London value high. Gamma exposure levels, they can be pretty good sort of stepping stones for orientation. Are they giving way or are they stopping us? When they're not close together, it can actually give you an idea of how much space you actually have from one level to the next. So that's another thing that I like to look for. And it doesn't make anyone's job any easier because it doesn't make you predict what's going to happen. You still have to read price action around it. But it does give you an interesting picture of what they want to be doing with it. Now, I am going to be focusing on platinum today more in my live. So let's talk about platinum because gold is doing some weird things and it seems to be making all-time highs overnight rather than using its regular trading hours. So looking at platinum, let's start from the big old weekly chart. It's doing a bit of a drop page drop from the weekly supply. Now, whenever we get to the middle of the range, it gets a bit more difficult to figure out if they're going to keep going or not. And this is where intraday levels have to come in. One area that might be a point of interest today would be 1007.4. Just from a daily chart, looking at where the supplies are, that is the nearest edge of the previous drop. Call it a resistance, call it whatever you want. Supply and demand is a little bit different from resistance and support because it has some more conditions attached to it, so it's not good enough to just have a high or a low, but you also have to have certain moves away from it and looking at how prices actually arrive at the area, whether there's some funky behavior going on before then, creating some demands, but it still looks pretty short on those large time frames. Now, when we start to drop towards more intraday time frames, I've plotted some options activity levels, value areas, and my projected ranges for the London session, but also for the entire 24 hours. I should probably put in, did I put in the 24 hour? I didn't, so let's do that as well. Now that's pretty far away, 974.6, so that's what I'm missing. So this one is a 24-hour ADR low. Now ADR and ATR, when it comes down to the calculation of what's happening, they are pretty similar. But the indicators that come with most platforms look at ATR rather than looking at the previous sessions and then aggregating the average from the last 10 days. So I'm not really in favor of doing that unless we have some huge day and then you have like a big volatility increase on the day, which can then kind of tell you for that session exactly what stop loss roughly you should be using on your given time frame. Now for my purposes, I do use the exhaustion points for the average ranges. So I don't use it as, oh, let's have a look at the last 5 minutes and, 14 periods of the last 5 minutes and then plot a stop loss that way. I like to look at these projected ranges twofold, right? They have two purposes, dual purpose. One is to calculate the stop loss. And second one is to project how far this can go, whether up or down. So it is the way I do it, it is a dynamically calculated measure. So it is not one of those where, oh, midnight comes and you plop ADR above or below. That's something else. That's fixed ranges. What some of our tools do, I have dog hair all over me, sorry. I was cuddling with Bernard earlier. So when you have, let's say that platinum, for example, right now, has an average projected range of 130 for the London session before COMEX kicks in. So if you have a move that goes all the way to 130 ticks roughly, is it still a good idea to keep going with it? Well, if you're thinking outlier day due to a release or something, maybe we have a rate decision, maybe we have, some sort of economic releases that might put a wrench in the works when it comes to the normal market movement, maybe, just maybe you can use these levels on a back test. So if let's say London ASR high gets overshot, excuse me, then they go back down to test the average London session range high from above. That can be sometimes used as a bounce for further upside move, but only if you are thinking single direction trending day, we're screaming up or screaming down, and then you're expecting a vast increase of that range. For most other days, these levels are going to show you that we've got to a point where we've already been for the last 10 days on average, And at that point, it becomes quite dangerous to keep going with that move. It is the technical definition of buying the top and selling the bottom. So this is why sometimes when I see people doing long NQ trades or short NQ trades into these areas, I'm just like, just no, just don't do that. And it always makes me really nervous seeing that, because those trades have a very, if you're going against the algorithmic ranges, the projected ranges, those trades have a high rate of failure, because most days will not be outlier days. Most days will be pretty normal. They are going to come up to some of these levels, maybe wag around them a little bit, maybe overshoot by a few ticks, because it is an average. It's not like, oh, to the tick. And actually, if I show you, let's have a look at our Bob yesterday for one of my favorite setups. And just to make things a bit quicker, I am going to move on to my main charting platform. So right now, what I'm doing, I'm using our little backtest mode. It doesn't erase candles, but it does show you what happened on the day. So yes, it's hindsight capital, but these levels were there in real time. So it's not really hindsight capital, it's more of a backtest mode. So how did the price behave? Now, usually I like to fade our Bob into the last sort of 90 minutes of the session. And here we have an exhausted average daily range low, right? So we got there, overshot a little bit. Here is that 90-minute into settlement mark, so the final 90 minutes of the NYMEX. And what happens? They stop, they stutter, start turning it around, and whoosh, 100 ticks up, like it's nothing, right? So those sorts of expectations is what I look for when we reach one of these levels. Now, if I'm looking for a swing setup or something, intraday, you can use the London projected range. Like, I like to trade platinum from my 11 a.m. And that is in another, let's say, another hour and 15 or so. That's when I start looking for some swingy type setups in platinum, because anything before then is a little bit tricky. And they don't seem to have a direction without some drama before that overlap period. Now let's go down to a 30-minute chart now that I've kind of explained all of that. So what do we have from the options activity? Well, we have GEX1, which can be a pretty strong level at 1,000. However, I'm really looking for platinum to test this London value low at 1,002.4, maybe even to touch this 1,004.4, which is the London average session range high, before I start looking for more swings downside. There is a danger that once we get up to these levels, we get a special situation play and move all the way to that supply from the daily chart that I pointed out around 1,007.6. And then reverse. So really, this whole area is where I would like to become a seller on platinum yet again. So I'm not looking for a fade. I'm going with the larger time frames. And literally, I have a zone where once we get up there, I'm like, okay, I don't want to be buying this here. I want to become a seller. This should be a part of your plan or some version of it. This is my version of it. It's backed in data. Now, if we don't get up there, that's fine. There are other ways to get in on trades, but they might not be swing opportunities. They might be more intraday opportunities, because your trade location won't be nearly as good. So it's not going to be strong enough in order to survive for many hours in the day. And those types of trades are really my strength, right? Yes, I can do intraday trading on RBOB towards the end of the day, but really where most of my bigger profits always come from is finding those large opportunities and then going with them and holding it for like 4 or 5 hours, sometimes even longer, sometimes 7 or 8 hours. But on average, those sorts of trades will be 3 to 4 hours. Eric has a very good question. Do I increase or decrease my trade position size depending on volatility? So larger size in low volatility environments. Eric, I would actually say that that's a very good point. Now, I would probably first have a look at the stop loss size that I need. Now, remember, my stops are systematic. They're not, oh, D is just going to take structure and then willy-nilly plop in a stop. I'm usually looking at it from the point of view where let's have a look at what this did over the last 10 days. And whether in the last 3 days, whether we had a market increase or decrease of that. From there onwards, I have a set trade set loss per trade that I want to risk. Whenever I'm starting a new 150K account, wherever that may be, it's usually $350 maximum per trade. So for something like platinum that is pretty cheap, you can go in with 2 lots immediately. Now, if that number changes, like if platinum suddenly starts trending every single day and I can see that the ADR has increased, obviously I will size down, but I will increase the stop size, okay? So less of a size and bigger stop. And likewise, I don't really like to size up in low volatility environments, and I'll tell you why. Because when you have a quieter day, unless it's seasonal, unless it's like summer, or unless we're going in and around the Christmas period, it's very difficult to just size up and then to experience a liquidity spike. Now, liquidity spikes don't care about, the fact that we're in a low volatility environment. And in fact, this is the danger of low volatility market states. You get the same amount of whipsaw, but the trending moves are not there. So rather than going larger size in low volatility environments, like maybe if you're trading corn or something, right? Corn is very directional, but very quiet when it does move. Then you also have bonds. You have spread traders who have traditionally used massive sizes, like massive sizes, right? Why? Because bonds are very, very thick markets that don't move a lot unless there's like something to do with a monetary policy or, anything to do with quantitative easing or, rate changes and stuff. That will be very impactful on bonds, on fixed income markets. However, as a whole, it's not a great idea to size up on something like NQ just because we've had one quieter day. It's a terrible idea because you can get something like the MOC move. So all of the day, very quiet, very quiet, very quiet. Then you get MOC and it smacks you in the face and then goes massively in a short squeeze. That happens a lot. So rather than sizing up in a low volatility environment, I would be very careful to use better trade locations. And what does that mean? Well, if you have a range-bound market, you'll be looking to get involved at the tops and bottom of that market, right? You won't be necessarily looking for, some big trending move because that is not the appropriate strategy for that type of a day. So if you just kind of apply some critical thinking to that, it is a very good point, very good question. But yeah, I wouldn't size up. I would just keep it the same and just take whatever the market gives you. Now, I've got to make a point here. When I say changes in your position size, I do not mean from 1 to 5 to 10 micros, minis, whatever. That's a huge variation in your sizes. If we're talking increase versus decrease and you are trading with, let's say, a few micros, I'm talking like a third of the position. So let's say you're normally trading, 3 micros. Well, you might go down to 2 if it's a, crazy volatility. Or, if you're trading with 6, maybe you can trim a couple or add a couple. So, I don't want to see, like most people in this retail, environment they think that sizing up from 1 mini to 3 minis is an appropriate thing to do. It isn't, okay? That's a like 200-300% increase of your position size. I actually had somebody about a year ago on my YouTube channel, because I was saying, I had this. I like to do a bit of comedy on my channel. You know, it's not like super serious, but it offers value, and I feel that every time I put a bit of humor in it, it doesn't make the whole trading so dry. And you know, I have many kind of metaphors and stuff that I use, like grasshoppers. I call overtraders. So overtraders are grasshoppers. Why? Because they keep hopping in and out of positions, right? It's like somebody does 40 trades. He's a grasshopper. There's no doubt about it. And then, you know, if you do something you're not supposed to do, that's like Muppet behavior, right? Don't be a Muppet. Muppet meter. What's your Muppet meter? Is it high? Is it low today? And that tends to make people remember things more. Now, with the sizing up, I had this quasi ASMR video where I was literally whispering. I think it was what was it? It was 3 reasons why you fail your prop challenges. Something like I don't know exactly what I was doing because it was a while back, but I was whispering. You're trading with too much size 3 times, right? Like, you're trading with too much size. You're trading with and then at the end of it, I was shouting and I said, "Stop it!" Stop it. So that would be a perfect example of, you know, why people fail challenges. So it's got a lot of truth in it, but I kind of like to do it from a comedy standpoint. Now, my dad was a comedian musician, so I grew up in, like, you know, our house just constantly cracking jokes and coming up with new ways to you know, say something meaningful but in a funny way, and I kind of transfer that onto my channel. It's not that I can't be serious. I'm actually, it's a funny thing, because when people first meet me, and they don't know me very well, they're like, "Oh my God, you're the most serious person that I know." And I was like, "No, I'm not, but never mind." So, you know, people have maybe a different perspective of or perception of me in real life versus what I'm trying to do with my YouTube channel and with TopstepTV and stuff. But it's definitely something to consider, that, you know, when you're doing something Muppety, it's going to affect your P&L. So one of the Muppety things that we all do is to size up too fast, too quick. And then on that same ASMR video, I actually had a guy going, "So what, you're telling me that me trading 3 mini NQs is too much size?" It was like, as if it's like, what? It's too much size? And I'm like, duh. Of course it's too much size, man. Like, what the hell? Like, where is your brain? You know, what could you possibly? And the only thing that that makes sense there is that you're looking at the nominal value of the account. So it's like, oh, it's a 150K account. Surely I can trade 3 NQ. No, it's a $4,500 account. Okay, it's nowhere near 150K. You have a maximum drawdown of 4.5K. That's what you're working with. Okay, so does it then make sense? Like, if you had 4.5K in your private brokerage account, would you then plop in 3 mini NQs? No, because we're not insane, hopefully. And if you do that, well, then it's not trading. That's just gambling, right? Oh, let's size up as much as possible and blow up the account in 3.5 seconds. So thinking about your position sizes in a very conservative environment would be a very prudent thing to do. Okay, so very good question, Eric. Thank you for asking. It is something we all need to think about. Luke says, "Do you trade NQ? If not, why?" So I've been trading for 18 years, and 13 years out of that Is it 13 years? It might be 14 years now. Yeah, out of that, I have traded NQ. It's not like, oh, I never trade NQ. I do sometimes, but I don't like it. I don't like it because I like to hold trades and I like to have smoothness in that swing. So if I'm going to hold something for 4 hours, I don't want it wagging up and down in my face by about 150 ticks up and down. And 150 ticks is like best case scenario that we have a day where it actually moves one way. No, the way NQ moves, it's like it goes down 50 ticks, then it smacks back up for 150, then it falls massively for 300 ticks. And this all happens in the space of, like, let's say 30 minutes. And in the same time frame, you will have platinum that is either rising or falling by the rate of, like clockwork, about 30 to 35 ticks per candle, going directionally in one way very nicely. If you want to hold trades longer, you can't do that with NQ without suffering from some sort of mental illness, right? By the end of it, it's going to eat you up, chew you up, and spit you out, okay? It is not a product to hold. The only way to hold NQ would be to have a 1 micro, to have a pretty sizable account anyway, and then to use a massive stop and just let it do whatever it's going to do. But you can't trade that on 20-point stops, okay? Stops that would be required for something like that would go into hundreds of ticks for a stop. So that would translate into using, probably about, if it moves 1,500 ticks in a day. So let's say half of that. So you would need to use like a 700 tick stop for a swing trade in order for you to desensitize the position to the intraday whipsaws that NQ has. You will notice if you watched Linda Raschke, if you watched most of us who have been, like Coach Jack, anyone who is an older person, Dalton as well, he's in his 80s now. Nobody mentions NQ, okay? Nobody goes, yes, NQ. And in fact, the markets that they do mention is things like corn, things like crude oil, something that's not going to wag 200 ticks in your face in 3.5 seconds and cause unnecessary losses. Like, the only people who love NQ are people who generally have not either traded long enough, so they're still like all like dollars in their eyes, thinking that NQ fast moves are going to give them overnight riches, or people who just like momentum hit and run trades. Now, those sorts of people are few and far between. They're almost like unicorn traders. And one of them we have here, it's Nick for a Tick, right? But you don't see Nick for a Tick do 1 million trades a day. I've said this many times. He does like 3 trades per day, maybe 5, right? Whereas what most people do, and I've been the VIP coach now for the team, so I can see what you guys are doing. We're talking trades that are like 20, 40, 60 trades per day. It's like, why? Because NQ. That's what it does to people, right? It's like, oh, I got 1 loss. Oh, maybe I should try. Oh, okay, that made it. Yeah. Okay, more trades. And then you basically create another jail for yourselves. It's like, oh, whoopee, I'm not doing 9 to 5. But I'm staring at NQ 8 hours a day. Like, for me, I want to release my time, right? I don't want to be married to the charts all the time. If I run a trade, I don't want to have to watch it every 5 minutes or 3 seconds. I want to be able to go walk my dogs. Like, quite frequently, I will kick off a trade and then F off outside of the house for 3 hours, okay? Yes, I check it on my phone every so often, but I'm not, I'm not obsessing over, oh, has it taken out my stop? Because I know that I'm using appropriate size stops, and I can chill, I can relax. I can see Coach Hoop is here. Hey, Hoop, good to see you here. Hoop has so much knowledge. If you're lucky enough to be in his group, you are like, you have no idea what you've got, right? So don't blow out of those VIP combines. Just, soak up every class that he does. He is absolutely amazing. He's a huge character. He's traded in the pits, and Hoop is my trading buddy, right? We talk every single day. So Luke, yeah, going back to your question, I do trade NQ very sparingly. Like I will sometimes trade it if I feel like it, and usually it will be during power hour because there's the short squeeze usually, which I quite like. But the short squeezes these days don't come every day, so you have to be a bit more selective. However, let's say that we have a failed auction to the longs, so they tried to go down, went back to the initial balance, and then we get to that final 30 minutes. And it's still there. So in that case, I will put in an NQ trade. But again, I will use a wider stop. Like most people use 20 points. I will usually use 35 to 40 points on NQ, which is like 140 to 160 ticks on a very small size, right? Very small size, bigger stops, and then I will give it time to do whatever it needs to do in those last half hour. But do I do that every day? Absolutely not. I hate the thing. I wouldn't be here for 18 years if I traded NQ every day. I would probably look 100 years old. I would probably be on antidepressants at that point as well. You know, it just drives you insane. You need something. Beta blockers, antidepressants, you know, and then you can trade NQ. Obviously, I'm joking, but for me, I think at least a beta blocker would be needed. Okay, let's get serious. Now, platinum is still kind of creeping. I think gold is. I'm looking at it in the other on the other screen. It did kind of try to go down, but it's not exactly smashing it. Yeah, I mean we're still hanging around this Gex 8. That's quite pathetic. But it's turned around now, so, you know, I'm not liking this buying wick here. Every time you see buying wicks, it does indicate some sort of passive buying. So they're trying to put it down, somebody keeps buying it. Trying to put it down, and they keep buying it. And that is still not a good setup of any kind, so we still wait. I don't know whether I'm going to even get a setup for the duration of the stream today. It is Thursday. Thursday lends itself to more trending type moves. What's the date? When do we have rollovers? I mean, I think gold just rolled over. I think crude rolled as well. Are we rolling again? Let me see. Let me see what contract expiration dates say. Because sometimes gold likes to kind of roll into future contracts, but I do think we're in March now. So, is it March? No, it's April. Yeah, so we might be all right. If I can ever open this. For some reason, my internet has decided to slow down. Hopefully, that won't affect the stream. If Hoop is the okay, yeah. So yeah, Hoop. Are you can you tell me whether gold is rolling or not? Because for some reason my CME is taking forever to open. So he says Nat Gas, the Widowmaker, is rolling right now. Okay, so we're in rollover on Nat Gas. But gold, I think we should be okay. Didn't we didn't we just roll into April? So we might have another month before gold rolls, but don't quote me on that. Because, okay, Hoop is going to check for us. He says dogs woke him up. Calvin, hello Calvin, good to see you. He said, I'm late, first time here. What are we currently watching for, or what do you normally trade? Unfortunately, I normally trade DAX during London, which we don't have in Topstep. I've been begging, I've been campaigning for DAX and FTSE as well. But DAX is my main product for the London session. All of this, Platinum I trade, like I said, from my 11 o'clock. That is in another hour or so. So when we kind of start to drift towards the overlap, that is when the swings for the day in Platinum typically set up, and in copper as well. Anything before then, it's a bit spiky. Like you can see this 30-minute candle on Platinum. It's really spiky. Oh my god, that's scary. How big is that? Yeah, it's 77 ticks. That's a lot. But basically, DAX, I do sometimes find something called the Frankie fakeout, especially if we take out the Asia low, then we reverse at London Open. There's a setup that I like to take, and it is a bit of a momentum trade that will only last for like 15 to 20 minutes. And in the end, it's and then it gets quieter, or they try to set IB or whatever, and then I wait until we get to again 11 a.m. my time. So like 3 hours into the London session, I start looking for those more swing type setups. And that's the time when you get a lot of trending moves in DAX. Yesterday we had an outlier day. They obviously didn't like some comments from the ECB that we had. And, okay, so Bruno is saying, oh, I wish I can see that, but I've got it in the tiny screen. So let me move the messages over somewhere where I can actually read that, because D is not old. Right, let's see. Yeah, so we are in April. So it's still a front month. So yeah, I don't think it's rolling. But if we do, like once we roll forward, it looks like it's going to roll into June. Is that right? Luke says I'm feeling the same way about NQ. Yeah, it's certainly a doozy. Huh, famous last words from Desmond. What goes up must come down. Let me know how that works out in equities, because that could be a long road. The reason why I say famous last words is because it's one of the things that makes people blow up accounts, right? How much higher can it go? That question has been asked since the dot-com bubble, maybe even longer. We can ask Hoop what he thinks. But yeah, since the dot-com bubble, people who have been saying, oh, it's already come up 300%, it can't go much higher. None of them are employed anymore. So yeah, be very careful with tech and with, disruptive technologies, because is it a bubble? Can it just kind of smash down? Arguably, gold is a bit of a different product, but it is used as protection from inflation, right? That is its primary use, at least in some of the more traditional portfolios. We now have arguably some newer safe havens like Bitcoin and stuff, but I'm always a little bit skeptical about like digital currencies. It's like it's not an actual physical thing. So if we had a semi-apocalypse or a true apocalypse and there's no internet, where do you get your Bitcoin? Like gold, you can just have actual physical gold, right? So we can trade that. And if you ever played video games, there's Fallout. If you've ever played Fallout, they trade bottle caps. That's the game's currency. Because, money doesn't exist and you have to trade something physical, correct? But no, it's an interesting thing. So I wouldn't be putting my money into Bitcoin as a safe haven purely from that point of view, because if we have a true apocalypse, the internet is probably not going to be around, right? So very tricky. And I'm talking like, a meteorite hits us and some of us survive, right? I'm spinning out here. Let's have another slurp of matcha latte. Some activity in June right now. Yeah, no roll. Okay, thank you, Hoop. Yeah, that's what Bruno has posted as well. So there are a certain number of contracts that are starting to roll into June, but for now we're still in April. Yeah. Desmond says, with gold being at all-time highs, what do you look for to short it? Open below value would be a good indication. So as long as it's opening above value, it tells you that the sentiment is to the upside and value areas of distribution curve from the previous session. But if it settles down, if it maybe goes into a bracket, what's a bracket? Overlapping value areas. So distribution curve for one day, then overlaps sort of the next day, and then the third day also overlaps. Well, on the fourth day, I might think, okay, if we open below value here and we don't accept it, this could indicate rejection of higher prices. So maybe then I will short it. Until then, I'm going to keep trying to long it, no matter how mean gold is to me. But again, gold and I have a love-hate relationship. It is still a bit too spiky for my liking. Doing these 100 tick 30-minute candles is not something I love seeing, right? So if I'm going to hold a trade for any sort of length of time, I do want that smooth movement. Now, that's something that DAX has on a lot of the days. Maybe not when it's going a bit crazy and there's ECB rate mentions like yesterday. So yesterday we had a lot of news about what they plan to do with rates, excluding rate increases and stuff. And obviously that's a piece of news that's very touchy, a very touchy subject for DAX. It just went into a crazy move down. I haven't looked at it super detailed today, but if we take the stance that this overnight long has merit as a mean reversion trade, one thing that I would be looking for is maybe a neutral day fade. So I would be looking for a test of the average session range London low, and I'm sorry for talking without showing you what I mean. So average session low is at 22,455, and we already have an extension upside. I'm not too keen on taking the short if it fails the auction, so I will probably stay out of that. And then once we get to below London value and hit the algorithmic range, maybe there is a chance that we go back to the middle of that range, which would be, just a scalp for maybe about 30 to 50 ticks. Nothing, nothing smashing about it. But it's probably going to be a long wait. Now, once we get below value after opening inside of it, so opening in balance from yesterday, this is called a responsive long. Why responsive long? Because the wizards, the market makers try to bring it below value, but then some other people step in and they go, no, we actually want it back inside value. We're good where we are. Now, the fact that we've opened inside value does indicate acceptance of prices where we are right now. But DAX is an equity index, right? So that doesn't mean further shorts. And usually these comments from ECB tend to fade in focus the very next day, which is something we've seen overnight. That's not to say that, it might have another crazy day. It's just not statistically very probable that DAX just kind of goes into some mad, crazy trend down. It could happen. It's less probable. But it can happen, right? I haven't looked at the options activity yet, so that would be next on my list. But I'm going to leave that for after. How do I get access? So Jake says, how do I get access to those classes? So with a VIP coaching, it is a random draft. You have to, so we run it in seasons. It's a 3-month cycle. They run VIP drafts. Now you have to fill in some of those drafts, and the more that you fill in, the higher your chances are to get in. It is a random draft. It is not a random pick of whoever is signed up. Now, even if you signed up just once, you still have a chance to get in, but obviously the more times that you fill out those forms, the odds are higher of getting picked. On this time around, we've already got our VIP team, so each coach, including Coach Hoop, he's here. We all have 50 traders, and I think Coach Hoop runs classes even outside of it that don't require you to be a VIP member. So, Coach Hoop, tell me the time when you run your classes, and like your normal classes, not the VIPs, because I think those can be attended by everyone, but correct me if I'm wrong. Yeah, Coach Hoop 3000 this week. I would expect that. That's what I was gunning for yesterday and got smacked in the face. So, we'll see, but I'm not giving up. We're gunning for 3000. Discord. Okay, so Coach Hoop's classes are in Discord, in Topstep Discord, every day at 4:30 p.m. CST. So I'm going to give you a link for Discord in case you're not there. You need to be there. So if you want to get access to Coach Hoop's classes, that's the time that they are. Lighter, it was just a joke. I said, who are they, the wizards? That's, every time somebody says, oh, they took it higher. Like, who's they? Where are these people? Rod says, I also love DAX, but the euro-dollar conversion for Topstep is the problem. Maybe they can introduce different accounts, dollar and euro. I think they just need to buy the bloody Forex feed, and I think they don't want to do that for some reason. But yeah, so I don't know. I mean, they said now July 2025, but I've lost all hope. I've lost all hope that it's going to happen. All right, let's have a look. So Tooth Fairy Luke, what are the requirements to get into a VIP team? I already said that. So just that you fill in as many forms for the VIP draft as possible whenever you see them during the main broadcast. I don't do that here because it's something that Eddie does, I think. So he's in charge of that, and he posts it during the main broadcast. You do have to watch it, and yeah. All right, so let's have a little look-see at the this gold thing. I mean, it's trying to go higher, but it's just not. Like every time it pops up there, somebody comes in and sells it. So let's go down to some lower time frames first and foremost. I mean, this smells like a range-bound day to me now. It doesn't. Like there's like wicks on both sides. Like when I see this, like look at that, how it looks. Wick up, wick down, wick down. It's like, what are you doing? Like, make up your mind. So every time I see that, that will be maybe a cause to go, well, maybe this is a range. And then what you're looking for is a smash of the highs and a reverse to the middle. So not full rotation, but to the middle. And then maybe a better choice would be to look for longs. So smash through the low at 29.67.3. This is just London specific. It is not going to be relevant for COMEX because we're going to have some other reference levels later on that are COMEX specific. This is just London specific. So when it smashes through the low, you again look for a fade of that back to the middle, maybe to this GEX level, because that's a really nice round number of 29.70. And at the point when this decides where to go, obviously your range bound trade is going to run you over, and then you'll know. Then, you're going to find the direction that way. You pay some money to get some information. So it's an expense. It's not a loss. I hate the fact that, we're always like, oh, it was a win or it was a loss. It's a business. It's either a buffer or it's an expense, right? If you make a big expense, you're going to have to work hard to get back to scratch, to profitability. But it's still, something to think about, expense versus buffer. Calvin says, what are we looking for this morning? I'm stalking a platinum short a little bit higher up, right? So London opens actually 90 minutes before I start this stream because I typically don't really do trades every day for London Open. And London Open is not as crazy, especially not on these products. If we were talking FTSE, if we were talking DAX, yeah, there is a setup that I like to do that involves Asia highs or lows when we have them clearly defined. And then something that I call the Frankfurt fakeout, Frankie fakeout. So it effectively takes that out And then you look for a fade of that in the next sort of 20-30 minutes for the first half hour. But seeing how we don't have the London appropriate things here, the London session tends to be a bit temperamental. Sometimes it's great, most times it isn't. And you have this, I mean, look at this. If I look at gold, what has it done since the open? Nothing, right? It's in a range, in a range, in a range, still in a range. It's like, I'm not a scalper, right? I don't like taking 10 ticks here and 10 ticks there. It drives me up the wall, right? I can't do it. Especially not when the scalp and the range is so tight that it doesn't offer me a good span to play with. If we're talking a neutral day with a decent size in the initial balance range, at the very least 70 ticks, you can then kind of snipe it from tops and bottoms and then have about 40-50 ticks to the downside or upside to grab your scalp. But to me, my scalps are not defined by the number of ticks that I take. They're defined by, you know, I don't take 4 or 5 ticks. You know, my scalps are like 30 to 50 ticks, right? So again, everything is bigger. When I'm doing my swings, I expect to get at least 160 ticks out of it. Like at the minimum, 100 ticks, right? If I'm doing more of a scalpy type trade, I might look for a double, like let's say on RBOB or something, I might look for 2R. So it's like, if I'm using a 65 tick stop, I would be looking for 120, 130 ticks. But to me, that's still like a shorter intraday trade because I only expect it to last for 30 minutes. So I don't look for number of ticks to define a scalp. I look for time. Am I holding it for hours, or did I just hold it for like 10 minutes and then, you know, got what I wanted out of it? So it's almost like this, the velocity of the price action is what makes it into a scalp rather than any certain number of ticks, if that makes sense. So London opens, depends on where you are, Kelvin. If you are in on CST time, then it's 2 a.m., right? But again, pointless for me. I would never do any trades. I would just sit here and sit here and sit here. And even now it gets, you know, difficult because I only do my main trading after 11. So that won't happen for another 40 minutes, right? So it's still a lot of talking. This is more of a class than anything else. It is more meant to be educational. They're kind of looking for like super valid trades. And most of the moves that are significant either happen in Asia. I don't trade Asia because I sleep. So most of the times I will not be awake for Asia. I'm just like snoring away. But Asia seems to have cleaner moves than London, right? London gets a bit spiky, a bit messy on these products. And then once the overlap session comes in, about 3 hours into London, then I look for my setup. So do I trade London? Yes, but later. And this is also a reason why I don't, you know, why I don't start them exactly at London Open. It's like, let's go, because it's not like that. It's not like the New York session. New York session is bonkers, right? It opens up, everything starts moving, everybody's trading, wow, like people are crazy. And London session is like, okay, it's open. Let's trade. It's very English. So, you know, if we ever break out of this range, we might get a gold trade somewhere. But for now, it's just undecided with a skew to the upside. It's how I would describe gold. But no setups yet. If we get to platinum at 1,000, I have all of this zone really, maybe even higher up, but this is the first zone. Anything above here, I want to become a seller. So I will start to monitor what's going on with price action once we are at least at 1,000, because that is GEX1, gamma exposure level 1. All right, gold is trying. Is it going to fail again? Come on, gold, you can do it. Come on. No, still nothing. And just watch them like grab this. Let's watch them grab some liquidity up at 74 and then reverse. Lovely price action. Okay, so hopefully that makes sense, Calvin. Until we get DAX, London is always going to be tough. And I mean, if you like scalping for 20, 30 ticks, it might be your jam. It might be like, yeah, you grab 20 ticks and you run. It's just not my style of trading, right? I look for longer opportunities. Tooth Fairy Luke says, will you ever retire from trading? If I have to, yes, but I do love this business. So you see people like Coach Jack, he's 85, is he? 83. Dalton, 83. They're still not retired. So if my brain and my eyes are serving me, and if I'm not a drooling, demented fool by then, yeah, I will be trading. So I doubt that I will retire. I'm not one of those people who's like, oh, let's just do nothing and enjoy life, right? I like being busy. That has been a bit of a challenge in the recent years because I, long story, but I basically have a vaccine injury that has caused the chronic illness in me. And I'm not happy about it because it means I can't do things that I want to do. And every time, I go for, like, for example, Monday, we went down to storage and we went down to visit our new house to just start planning out new furniture and all that. And I spent a couple of hours just standing in the kitchen chatting to the old owners, not doing anything. I wasn't lifting things. It was just like standing and talking. As a result, I'm suffering over the last 3 days. I feel exhausted. I feel tired. And it annoys the hell out of me, right? I'm somebody who used to work 18 hours a day, loving it, right? I love all of my businesses. I love what I do. And yes, I make sure that I spend time with the doggos and, walk them and with the husband and everything. But just the fact that I have limited energy these days is just like so annoying. So if that gets better or if it doesn't get worse, I still hope to be trading in 20, 30 years time, right? So if I can, if I'm able, and if my brain is serving me, I'll be here. You're going to get sick of me. Yeah, Calvin. So this is how to look at the London sessions. It's a free masterclass about a whole bunch of stuff. You can apply everything that I say for the London session to the COMEX, NYMEX, and NYSE sessions as well. You would just need to use the London, use the session-specific value areas for that session. You can even apply that to Tokyo. All of the things, all of the setups still look the same. It's just slightly different behaviors in general. But yeah, the core concepts: initial balance, where are we opening in relation to the distribution curve? How do I use average daily ranges as levels to project whether we have space for the day, or whether we've come up to a point where it's a bit dangerous to keep going with the trend because over the last 10 to 14 days, this is how much we've moved. Things like that are totally transferable to any session. It doesn't matter whether you trade London, whether you trade Asia, or whether you trade the main trading hours. But obviously we know that the New York session is crazy. It's like, it begins, and ever since COVID, it wasn't that insane before. COVID did something to everybody, and suddenly we have still this mad liquidity. It's actually half from where it was. So, let's say NQ used to have 3,000 ticks in a day in and around COVID. So from 2020, when you look at average ranges over the last 5 years, you will notice that it had like 3,000 ticks, 2020, 2021, 2022. And then suddenly we get to 2023 and things start to dry down. So suddenly we have days where we're only trading in about, maybe a 300 tick range. And yet, when it moves, it still moves 1,500 on average. But every so often, we get to the day when it's only 300 ticks, and immediately you see chat going, oh, it's a shit day. What is this price action? They start grumbling immediately. It's like, that is what it used to be like. Just learn to trade it or stay out. Don't complain. No victimhood, please. So there's always a way, right, up to a point. And then you get European austerity measures in 2012, and everything goes down to 30 ticks. Now, that, granted, that's like my cutoff point. I'm like, okay, like you're watching paint dry here. This is no longer a day trader's market. This is why I look at the volatility indexes. So, Calvin, you haven't been here for a long time, but because I trade alternative products, they won't always be appropriate for day trading. So I look at what is going on here? What is going on with my internet today? Like, seriously. Okay, so CME group volatility indexes. So what is that? You've heard of VIX. Everybody has, right? Well, believe it or not, nearly every single product has its own VIX. Now, while VIX for equities is usually like, oh, it needs to be around 20, silver, gold, copper, platinum, they have their own cutoff points. So as I was trying to drill into how they behave and what are the good day trading conditions, I worked out that, for example, platinum VIX needs to be over 25 in order to have really nice day trading conditions. Similarly, crude oil needs to have its own OVX at over 35 in order to get nice moves, nice ranges. So volatility is basically a reflection of how many ticks do we have to play with intraday. And when that falls below a certain level, it becomes very difficult to trade. You know, if you're a momentum trader, forget about it because there's no momentum, right? And momentum tends to seduce a lot of people that they're excellent traders. You know, I always say I see people doing really dodgy trades like into overhead supplies, and they're like, hey, that worked. Why? Because NQ is so crazy that it will offer you like 30 to 50 ticks. But you try and do that in any other market, you're going to get your face ripped off because it might pop through by about 5 ticks and then come back and just, you know, rip your face off the other way. So, you know, being a crude oil trader for 12 years, I've learned what not to do, quite painfully. So crude oil is one of those, right? When it's moving, when its own VIX is above 35, you will get ranges of about 300 ticks. And that's comfortable for me. You know, I like trading products that have about 220, 250, 300 tick ranges. As soon as we start falling below that, that's not really my strategy, right? I would then move to the options, right? Because at that point, it's not really a day trader's market, but you still might be able to do some options around significant levels. And it's less painful as well. You only have to worry about strike prices rather than, oh, where do I put my stop? And but yeah, so WTI, so crude oil requires 35 of its own volatility index. Something like DAX only requires to be over 17, and then we have pretty nice conditions. I think copper is above 20, bizarrely. So copper, let's see what copper is. Where copper's at. And right now it's at 23. So technically that does mean that I should be looking at copper as well. Gold, I can't remember what gold is. I think gold is much lower. It's kind of like if we're above, I can't remember it right now, but I think it's around 20. It gets a little crazy, and I think above 15 it's okay. So this is what I've implemented last year, just to make sure that I'm not trading products when their own volatility indexes fall below a certain level. So yeah. So if you're considering alternative products, that really needs to be a part of your plan. Yeah, Kelvin says, London session is chill, but I must be honest, I like the NY session Mark 3 and with our hair on fire. Yeah, it is the trader's dream if you're after instant gratification. But I always say NQ giveth and NQ taketh, because whilst it can give you fast profits, you lose your head, and then it's just like, it's like terrifying, right? Absolutely terrifying. Oh, look, they grabbed the liquidity and they came back into the range. Lovely. So I don't think I'm going to find a gold trade today. I was looking for longs, but I think we're going to get those, maybe the opportunity much later in the day. Platinum might be setting up for a short, but it still didn't reach my levels. When this happens, okay, so I have to talk about this because it's a very good point. When we kind of have a very strong downtrend and I never reach the levels that I was planning, what I like to do, I will then wait for the next session's initial balance to set, and then look for a break or a setup that speaks to that session rather than trying to fish for it and doing stupid things in the middle of nowhere. Because then I have new information. So let's say that, yes, we had a sell-off, but we settle in this range or maybe even further down, and then you get an extension below the VWAP, below Globex VWAP, which is this purple line. At that point, I have a initial balance breakout setup. Without me going, oh, I think it's going to go this way, the market shows me that's where it's going. So if this happens, it misses your levels, you need to have something else that will show you the way so that you're systematizing your approach as much as possible. And, you know, I say as much as possible because most of us are humans, we're not robots, we will make mistakes, there will be catastrophic days where you're like, oh my God, I turned into a complete muppet. You know, when people go, wow, I was like so locked in. I forgot to. It was like I forgot to trade. It all becomes about chasing movement and momentum. That's what NQ does to a lot of people, where you forget these levels, you forget to look at reference points. You're just like, it's going. I must get in. How do I get in? It's like this sort of like coked up sort of energy. I don't like that, right? I don't know whether you can tell, but I'm a pretty chill person. You know, I'm like, yeah, you know, let's do our DAX trade for 3 hours, and you know, I'm not bothered by NQ movement. But sometimes when I'm trading NQ and it does what it's supposed to do, but I for some strange reason didn't get in on my own setup, I then get frustrated. You know, I don't smash computers or anything, but I'm a little pissed off. You know. It does require a couple of shots of a stiff drink to get over that. Luckily, as a trader, I have very short-term memory, so that feeling usually passes me by about 11 p.m. So, you know, the market closes at 9, and by 11 p.m. I'm just already like, yeah, whatever. Put it outside of your brain, right? Kevin says, CL range. I've just started trading it with the Topstep morning team because I like the opening range strategies. While WTI is tame, I'm liking the low risk on CL opening range trade. Yeah, so the opening range trades I tried doing on crude oil for 12 years. I've got to tell you that it needs very specific conditions in order to work. Because if you're just going to take the opening range trade any day, it doesn't work. So we tested this. We actually had an algorithm that we ran and tried optimizing and tried doing a whole bunch of things with it without any external things. Now with algorithms, you can't over-optimize them too much because that is then over-optimization for a period that you're looking at, and it, again, won't work. But just as a core strategy, out of the 3 years that we were kind of working on it, it was only giving us 34% of accuracy. So when it works, it does work. Therefore, if you feel that there's enough space on, just purely from risk numbers, like, you know, risk model numbers, and looking at it as a system design thing, you would be looking for something like at the very least 2 to 3R multiples. So whatever you're doing with it, it must have a hugely positive risk reward. So I'm saying 34% best case scenario. There were periods of like 6 months or so when that number fell to 20%. That's why I don't teach the opening range strategies, because for my products, quite frankly, you get smacked in the face on both sides and then you're like, what happened? So you really need to define the day to have enough space. So definitely not trading when it's inside range and inside value. So that's how you define that. If it's already crawled up massively overnight, you have no more space for it. So it's more likely that it's not going to work. If it does work, maybe look at it from the opposite side. You know, just little things that you have to add to it in order to maximize the probability of the trade working out. But if you just take as a, you know, initial condition, break of the opening range, we go in. That was floating from 20 to 34% accuracy. And for me, that's not quite enough. I want to have, at the very least, like 40% of something working out, at the very least. But really, I look at strategies that will occur over 55, 60% of the time. So to be on the other side without any optimizations. And that, for me, is the post-initial bounce reversal in and around the euro close. But it can happen anytime within those 90 minutes, depending on how the day looks. So for me, that happens a reversal post NY cut, because NY cut is 9 a.m. Central. After that, I start looking for reversals, and it actually gives me an idea by the size of the reversal what they want to do with it. That is actually something that happens 77% of the time, and I've looked for like 8 years. We actually tested how much that actually occurs, and it's literally 77% of the time. It's like, even I was shocked because I knew it, like it was my strategy, but I expected it to be like, maybe 50%. No, it was 77% of the time they do that. And it's because of the option expiry in the Forex, and then crude oil and gold are Forex linked. So naturally, when you have a massive option in a Canadian dollar expiring, and when you have something similar in Australian dollar, those two are kind of having a knock-on effect on crude oil and our BOB as well, gasoline futures. Dozer TG says that info is just on CME. I think you have some of them on TradingView, but it's obviously a special subscription. I know that GVL is the gold volatility index. However, they don't have platinum, they don't have copper. They might have OVX, which is crude oil. They might. I'm not sure. Let me have a look. Yeah, so they have OVX for crude oil. A GVZ, so GVZ. And GVX, I don't know what the difference is. COMEX gold. Yeah, so GVX is COMEX gold volatility index on TradingView. And I think that's it. They don't really have anything else, unfortunately. So you would have to have some sort of a subscription. Whoa, there goes gold again. Let me have a look at Financial Juice. What is that? I don't see anything yet, but that was a big pump. Although it could have been a takeout of the range liquidity grab and back into the middle. Again, so I've talked about this earlier, right? You have a range, they take liquidity to the upside, they go in the middle. They just did the same thing, right? So they went below, smashed it, took out all the weak longs, and then came back in the middle. So I think this is still a range play. Okay, have you looked at silver? I have, but honestly, me trading silver on these accounts, I think it would be a little bit irresponsible of me, because these accounts are not big enough for silver. Even micro silver is a bit too big because the amount of volatility that market has. So yes, it's for micro, but it goes like a million ticks when it does move. And therefore, you would need a big account size for that. So I am trying to introduce good trading practices, and I'm trying to showcase that you shouldn't trade with size unless you generated a huge amount of buffer in your account. So you should take it slow, that you shouldn't blow up accounts left, right, and center all the time, because it does nothing for your skills. And losing an XFA after you've slogged it out in a combine, only to lose the XFA in a day, it hurts. And it hurts your wallet, it hurts your mindset, creates an unnecessary psychological trauma, all of that stuff. So we don't need that. So yeah, silver I don't think is an appropriate product to be trading until you're much further down the line in your journey. Justin says, I've been looking at entries at the low point of the volume profile. What is a simple confluence that works with that? I mean, do you need anything else with the LVNs? So that you're talking about low volume nodes. The trouble with low volume nodes, if you're looking at them only as reversals, that is kind of a little bit tricky, because the low volume node only tells us that there will be a huge, quick move through that. Whether it's a reversal or we fall or we rise through it, that's a different thing. But the LVN, in general, is there just to show you that previously we went through that area with very low volume, which means it pushed it very quick, right? Whenever you have a thick volume area, a high volume node, HVN, you expect the price to spend time in there because there's so much volume. There's going to be a lot of people looking at the level. You build up volume. This is why you can use them as supply and demands, right? And then look for for example, on platinum, I look for the low volume node from a 4-week time frame to basically just show me that my swing actually doesn't have much in the way. So I will be looking for a quick move through it. But yeah, if you're talking intraday and you have some sort of access that appears on the profile, so let's say market profile, you have an access on the TPOs. What's that? It's either buying or selling tail. So it's like literally one lot of letters. And then you also have a low volume node somewhere there. That could match up pretty nicely. So one is volume profile, the other one is market profile. But yeah, just price action is always king, right? If you don't get the appropriate price action you're looking for at the LVN, then no trade, It's pretty simple. And, anything to do with volume profile, market profile, it's very malleable to whatever you already have. That's the beauty of it. Some of the other things like, moving averages, they're not that compatible with other things because they give you different signals and stuff. But market profile, let's say you use moving averages, you add market profile initial balance into it. That matches up. It fills the void that one piece of information is missing from the indicator or whatever you're trying to do. So yeah, try market profile. Pure supply and supply demand. Support resistance. Or, you can even use the algorithmic ranges. So my projected ranges, if they're around the low volume area, that gives you context, right? So if we get up to it and you have an LVN, well, maybe a reversal is more likely at that point, right? So those are some of the ideas just off the top of my head. Okay. What time do you consider initial balance for gold? So gold's main regular trading hours, it's a COMEX session. That starts, my time, it starts about 1:20 p.m. if you're over on this side of the pond. And if we're talking Chicago time, it starts 7:20 a.m. And then because of the way the platforms used to be, you couldn't exactly start a candle on 7:20. So over the years, everybody sort of agrees that the COMEX start time for electronic trading is going to be 7:30 a.m. So I actually start my COMEX at 1:30 p.m. GMT, 7:30 p.m. CST, okay? So whichever time zone you're in, convert it. And then you look at the 1 hour from that point. So for my time zone, GMT, it will be from 1:30 p.m. until 2:30 p.m. For London, everything's the same. It's always 8 a.m. till 9 a.m., whatever you're trading. There's no different times. Fizzlet says, do you stop trading when you're depressed? My cat died recently. It affects my psychology, but my trades are still green so far. It really depends who I've lost, right? I don't get depressed. I'm not... I have never really suffered from... Like, I know that these days everyone suffers from something, right? Oh, it's either ADHD or they're bloody depressed all the time. It's like, just snap out of it. So I'm Gen X, right? I'm old, right? So back in my days, that whole thing of like, I'm depressed or I'm offended or something, it wasn't a thing, right? You say you're depressed, you would get smacked across the face. It's how we grew up, right? Or you're gonna get laughed at, right? Oh, you're depressed, are you? Welcome to my life. But no, I mean, I had a lovely childhood, don't get me wrong. However, being depressed was not something that was widely accepted. And I think it probably still isn't in my native country. So, you know, I grew up as somebody who was extremely emotionally stable, right? I'd never get depressed. I don't over-dramatize events in my life. However, whenever I lose animals, I do suffer. I've got to say, when I lost our first rescue dog, that hit me like a ton of bricks, right? That was very hard. He died very traumatically. He was a pretty solid old dude, so he still had at least a couple of years in him, but he was over 15. And during COVID, we went to the park, and whether they were putting down like rat poison or something, I don't know, because everybody was leaving shit everywhere, right? They would eat stuff, they would be outside, oh, lovely day, oh, we're gonna have like, you know, a nice COVID social distancing, but there was literally shit all over the park. Horrible. We're horrible as humans, I've got to say. I mean, really. Half of them were drunk, you know, have no idea, leaving chicken bones for dogs to eat. Like, it was bad. So our lovely Minton, he ate something, being the Yogi Bear that he was. And within about a week, he went from a lively boy who's still running, still loves his walkies, to something being off about him. He loved food more than life itself. So suddenly he doesn't want to eat and he's refusing food. So I was like, that's a bit weird. And then he started slowing down. Like, this all happened in the space of 10 days. And I kept saying to my husband, I think something's wrong with Minton. I think something's wrong with Minton. And he was like, no, you know, he's fine. But I noticed not eating, getting slower. And then there was this incident in the park where he confused the stranger, because he was a rescue dog, a little bit messed up. He confused the stranger for us. He went up to him and then realized it's not us and then barked at him. So he was obviously like, no, and I said, oh God, what, is he going demented now? What's happening there? Very soon, I think it was 2 nights, 2 days after that, overnight, he started behaving strange, right? So long story short, he started suffering seizures and stuff. We had to put him down. Very traumatic. Me and my husband could not like gather ourselves for him it was probably about a good 3 months. For me it was probably a year, like a year and a half. For the first month, I avoided trading, okay? Because I would sit down, I would see something that would remind me of him, and I would just start bawling my eyes out, right? That's not a good state of mind to be in. So I actually didn't trade at all for a month. I made a video, I will try and find it, about that on my Mark Stalker D channel, and it was 4 or 5 years ago now, because that's when it happened, but I felt that was that was something that we needed to talk about. So excellent question once again. What did I call it? I will find it because it's trading and grief. Here we go. Coping with a loss. Okay. And you can see me, I was very sad in that video. I was all like mopey and, you know, trying not to cry. So there it is. That's my video. Yeah, you just have to see how you are. If your trades are still green, then that's fine. And if you're not completely overcome with grief, maybe you can keep trading. But if you're not feeling up for it, or you're, you know, constantly thinking about your lovely pet, then maybe consider taking some time off. You know, markets are going to be here. They're not going anywhere. So, yeah. Let's have a look. But yeah, have a look at that video. Hopefully it helps you guys. Back then I was still using a cheap green screen, or I have a problem with the light in this room, and I could never get the lighting to be completely blacked out. So the green screen was like kind of doing weird things. Maybe in the new house I'm going to be able to somehow deal with that. We'll see. Iva says, hi Dee, how to show my ask in bid size, volume and DOM the way you have it. Yeah, so that is level 2 data. You have to go into billing, and then if you scroll down, you will have level 2 data that you need to pay for. I think it's about $45 now. It used to be $39, but I don't know, because I just pay for it automatically, so I have no idea what the prices are. But yeah, so you need to have level 2, otherwise you will only have 1 level deep. So you'll just have 1, 4 around the nearest price. All right, so I answered that one. Tommaso says, can you show us what the blue line you have on the chart is? Blue line. This thing, blue lines, that's volume profile. That's visible range, volume profile, which you will find in indicators, volume profile, visible range. And if you're talking about the DMI indicator, this is a visual representation of how the trend is doing. It is only price action based. It doesn't have volume in it, which is why I like to compare that and that. And then it sort of gives me an indication of whether the trend is still up, down, or are we just chopping around. Jake Sharrock says, can you talk a little bit about your indicators and VWAP settings? My VWAP settings are just default overnight, so I don't do anything with it. Sometimes I anchor a VWAP, but that's not a core part of my strategy. That's more Coach Jay. I do use it. I stole it from Jay. Sometimes when we have an obvious low that we have a significant swing from, I will anchor my anchored VWAP to that low or the high, but it has to be a swing first. So for example, right now, this high for me wouldn't be a good high to anchor a VWAP, but this low from yesterday into COMEX settlement, that would be something to anchor it for, anchor it to. So I know he uses different things to anchor, like the opening range maybe from memory. Again, don't quote me on that. But yeah, so my indicators on TSX are, you know, something that is a part of my strategy and does help me see price action, but they're more timing tools than anything. My actual indicators, I have a software development company, so we actually have these indicators. So I have Blantic supply demand, Blantic market profile, Blantic daily range. Those are my 3 core indicators. And then I have things like Fisher transform. I have some moving averages, and we also have our VWAP that can also show you settlement. We can now see NQ is actually rejected settlement at the moment. And if we can, you know, get some sort of a committed reversal there, then that would be maybe a short. But, you know, shorting equities has to have a pretty good reason for it. So we'll see. But yeah, so those are my main indicators. And then these ones, this is just regular volume. These, you know, red and green things, just a volume indicator. Literally, here it is. I changed the colors a little bit to make them more screamy on the screen. Volume profile, visible range. I have 3 9 EMA ribbons that I don't use on a 30-minute chart. I actually usually use it on a 2-minute or 100-tick chart. And that's also a timing tool. So basically, let's say you're looking for a reversal. This is not what you want to see. You want to see the market, like let's say you're looking for a swing, right? You want to see the market actually go above this ribbon and keeps going. As soon as it starts meandering back inside it, and then ultimately completely has one candle underneath the entire structure, that's my early exit. And vice versa if I'm long, right? Sorry, vice versa if I'm short. So if we are short, and then they do this sort of a thing, this would be my exit. But a lot of these levels that I'm dragging out, like GEX levels, that's from mentor Q, that is from the options activity, might be a bit over the head for somebody who is just starting out. But here you're seeing 18 years of me tweaking things and adding things and taking things away and stuff. And I've settled on the levels that I found have the highest probability for me personally and give me the biggest orientation for my style of trading. Is it appropriate for you? Well, some parts might be, right? But some of the others, maybe not. How wide are your stop losses? Probably wider than what you see on most things on TopstepTV. To give you an example, my stops for swings on platinum will be about 55 ticks. My stops on crude oil, usually about 35 ticks, 30 to 35. My stops on DAX, between 25 and 40, depends on what the volatility is doing. So yeah, that's pretty much my stops. I don't go down to 5 ticks. I do not like using, every time I'm trying to be cute and I'm like, I'm going to use a 17 tick stop. It smacks me on the face, then goes my way. So let's not do that. You know, every so often I try it. I'm like, let's see if I can mess with my own system design. And then very quickly it says, no, behave. And then I go back to my normal thing. So which EMAs do I have on my chart? These are just 9 EMAs anchored to different things. So the top one is anchored to the high, middle one is anchored to the normal one, close of the candle, and then the low one is anchored to the low. Here they are, MA 9 low, EMA, here's the high, here's the close. That way they will never cross over. So what I'm looking for there is for how the momentum is doing. You know, are we inside it? Are we outside it? But, you know, you can't really do that for intraday purposes on a 30-minute chart. It's not going to tell you anything. It's like, oh, yeah, we're touching the MA. Yeah, it's an uptrend. Well, whoopee. Great. But it's the changes of trend that I use to get me out of a trade earlier, because I have a penchant to hold my trades until the cows come home. And that's not a good thing. So I need something to tell me, okay, the trend is over, Dee. Book your profits now. And that's what the ribbon does for me. You've seen a similar thing with Muhammad, but he uses it in a completely different way. I think he uses it as like levels. I have other things I use for levels that are a lot of data, systematic and algorithmic trading stuff. And then I just use those as my main sort of setup orientation points, if that makes sense. Do you use trading drawdown in Topstep? And if so, will you please explain it? So I don't use a trading drawdown. I'm not somebody who struggles with that. Most of my up days, I end up at the high mark of the day because I don't trade a million trades per day. So, you know, if I'm up 10, 12% of the account balance, I'm happy with that. I'm not, you know, or if I'm up like $945, some people are like, let's just get the final, you know. But for me, in my head, that's a negative risk reward. So, you know, I would be chasing a tiny, tiny portion to get the 1,000 and then risking all of the other 900. So I'm a left-handed person and I do everything the opposite to everybody else around me. So I'm like that in trading. People who are Doing swings, a lot of the times they are like, if you read Best Loser Wins, he says that people in a winning position are fearful, people in losing positions are hopeful. I never had that. I'm always the opposite. Like, if I'm in profit, I will hold that and be super fine with holding it forever, right? But if it's in a drawdown, I'm like, oh God, this makes me really uncomfortable. Ugh, this is horrible. Come on, just stop me out already and put me out of my misery. But people are not like that. People are like, oh, it'll turn around. Oh, it's okay. It'll turn around. I don't have that. And, because I have a relatively low frequency of trading, so I trade from 1 up to 5 per day. My idea of overtrading is doing 13 trades per day. Once I've done that, I'm like, whoa, that was a lot of work. But in general, it's just like, 1 to 3 on average, maybe 5 if we have a range bound day, and I'm done. So whatever happens in that space, I'm done. I also use something called the day trading time zones, which is my concept. It's basically looking for a setup at a particular time of day, giving it a couple of shots if the first trade doesn't work. Obviously, try once, then wait for like 30 minutes or so, maybe 15, and then try again. If that doesn't work, you go to the next day trading time zone, which is frequently about 2 hours later. So because of that, I don't really use the come off the high, lose some money, and then, oh, yeah, I need to lock myself out. That is not my problem. But is this a simulated account? It is. So what... Bruno, I think they were asking about not the trailing stops, they're asking about the trailing drawdown. So, yeah, it's a different thing. So I personally don't have a problem coming off my high mark. In fact, most of my days when I've been up money, I finish up on the high mark of the day. Having said that, I do have some expectations of how much that number should be. And basically it's one of those things where, you're like, right, so let's say I've made, 200 for the day. If it's a new XFA, I might just walk away. But if it's a bigger account, I'll be like, what size of a position am I using? If I'm using 3 minis and only making 200, that means I've literally had a trade that didn't quite go my way. So I look at my returns in R multiples, if that makes sense. If I am up 2 R multiples on the day, I will walk away. If I am up 1 R on the day after doing 3 trades, I will also walk away because I've already tried 3 times. I'm only up 1 hour. Something's up, right? I better take the money and run. So that's how I look at things. I don't really look at things of like, more trading. Oh shit, I just lost 50% of the profits. Ew, lock myself out quickly. I don't have that, right? So I get why the trading drawdown will be helpful. However, I beat that out of my system a long time ago, and it's just not a problem that I have. So I don't use it. I still don't use that. However, if you're struggling with giving back too much profits, because I see people in the VIP, they're like, oh, I was up $1,000, now I'm down 700, still green. And I'm like, walk away now. Look it up, man. But yeah, most people we've seen it on shoulder tap, right? They're up 13 grand and then they end up the daily loss limit. That's something we should never do. If you struggle with that, yeah, use the trading drawdown. But I personally have no need for it. Okay, so I did answer about the ribbons. They're literally just 9 EMAs, high, low, close. What is my biggest loss and win on the 150K account? Nothing too dramatic. I think my biggest losing day was about 1.7K, and my biggest winning day, I believe, was about 1.9. But on average, I do float at $450 average on these accounts. I do have a corporate account that is massive. That's an entirely different story. I have a YOLO account that at the moment has 137K in it. So again, not massive, but okay. Biggest loss there, I think I had a day where I lost 10% there. So I lost 11K, and that was a bit of a malfunction of what I was trying to do. I was trying a new algorithm and I didn't define, live and learn. I didn't define the number of trades that it should try, and then you have to, like in coding, it's a weird thing. You have to make sure that if it's already opened one trade based on the trigger signal that you give it, and then you have to make sure that you set a code that will check that there is an open trade already. Otherwise, it starts opening trades like there's no tomorrow. So that's what happened to me. I kicked it off. It was one of my ADR reversal algorithms. So I kicked it off, and I look, and it's opened up like a million bloody trades. And I was like, what is going on? No. And my biggest win on that account, again, not so dramatic. I think last December it was 25K, so and it was a DAX trade. So yeah, 25,000 on DAX, and biggest loss because of the coding mess up that I did was 11K. So, you know, but on these accounts, they are prop accounts that, you know, I usually take forever to build. I'm not in a rush, you know. It's just one of those things where if you're rushing things, if you want to get rich yesterday, it's probably going to work against you, because you're going to be doing things that are not within your process. You're going to be doing stupid crap like, oh, today I'm going to trade 5 NQs, and tomorrow I'm going to get scared because I lost so much money, so I'm going to trade 1 NQ on 1 micro. That is a huge step away from things like the system design and your plan. Massive variable in the parameter that you set for yourself. Your position size is a parameter. Your stop size is a parameter. Your targets are your parameters. Everything that you change in any point of that fine balance will massively affect your results. And if you don't think about it, you just sit down, click buttons, and expect that magically somehow it's all going to happen. Guess what? For most people, it's never going to happen. So you need to start thinking in a different way. You see people like Dakota, who does have... So he's one of the people who's... I think he suffers from a bit of expert blindness, if I'm going to be honest, because he keeps saying, oh, keep it simple. And then he does things that are actually not that simple. He scales in at the right times. He scales out at the right times. He is very good at reading structure. He is very knowledgeable in system design in general. But then he maybe forgets that newbies, complete newbies, don't have that sort of knowledge. He also comes from a financial background. You know, all of that means you have a type of a person that is extremely skilled to the point of their skills looking like, wow, you know, this is so amazing, right? And it looks almost like magic, like he has no effort, does no effort into it, makes no effort. Christ, can't even speak. But in reality, it's just experience that has gotten to a level of effortlessness. And many people would try and emulate that and then find that their system design doesn't work, that what they are trying to emulate, how Dakota does it, it's simply not working for them, right? And then they're like, well, how can that be? It's because he does these like enormous Nikkei trades that have like 10R multiples in them. That are not going to be on TopstepTV, because, you know, sometimes he does them outside of the view of us, right? Market doesn't care when your setup comes, and he does trade the slow markets, but maybe sometimes the setup is going to appear later on. And even if he loses one, maybe he goes into another trade later and makes a killing. But people only see what they see in the short 90 minutes that we're doing these sessions, and they try to emulate that. So, you know, be very careful what you're doing with your system design, with your position sizes and all of that. You know, you can literally make or break your approach and your results by doing stupid things. We're going to finish it on that note. Please click like, click subscribe. check out the main broadcast. I'm actually going to be back for lunchbox trading today, so come and join us. In the meantime, I'm going to sign off. Thank you so much for being here with me. Always intelligent questions. And it seems that these days I can't really answer all of them in an hour. So we have been going quite a bit over time. I am trying, but good questions. What can I say? Anyways, guys, thank you so much. I'm Deeyana Angelo. This has been the London session on TopstepTV. I will see you a little bit later. Take care.